So you can see the customs case law summary which is given here. So page number 300 onwards you can see. First one, Garden Silk Mills case. In Garden Silk Mills case already we know what is a taxable event in case of import. So I just gave the case name, issue and the decision. Even if you are not remembering case name, it's okay, because last attempt, so November 24 exam, they gave a question and they clearly mentioned no need to write the case name. No need to write the case name like that in question itself they are telling. So therefore going forward they are not giving importance for the case names, they are going to give importance for the issue and the decision for that. So that's the reason why you focus more on this. Okay. So first, what is the issue here? What is a taxable event in case of import? Already we know the taxable event in case of import is the date on which it crosses the customs barrier. Customs barrier, not territorial waters, that is export, this is import. So date on which it crosses the customs barrier and bill of entry for home consumption is filed. If there is a reduction in price during transit, which price is relevant for valuation? So the price prevailing at the time of importation, that is a reduced price. Means if there is a price reduction and the importer pays the reduced price, so that reduced price only should be taken. This point also I told you, as import is complete only when goods become part of mass of goods in India, the price prevailing at the time of importation should be considered, that is the reduced price should be taken. Then Kiran Spinning Mills case. So in case of warehoused goods, when the customs barriers are crossed, as and when goods cross the warehouse, means we file a ex-bond bill of entry. When they are taken out of customs and brought to mass of goods in India, logically date of filing ex-bond bill of entry is relevant. Okay, so that is the date on which it crosses the customs barrier. And what is the relevant date for determination of rate of duty related to that? So we have one case, Bharat Surfax case. What is considered as the date of arrival if the ship first enters but leaves due to non-availability of space? So whenever it finally arrives, that only should be taken. So first the ship comes and then again it leaves and again it finally arrives. So finally when it arrives, okay, date of arrival is the date of final arrival. If the ship entered territorial waters and then leave due to non-availability, the date on which it finally arrives is taken as the date of arrival for determining rate of duty. Then Rajkumar Knitting Mills case. So whether date of contract is relevant. So date of contract is not at all relevant for determining rate of duty. It is always the date of importation, date of bill of entry, that is only relevant. For determining relevant date for rate of duty, date of contract is not relevant. Then Summer Timber Corporation case, it's a high court case. What is the date of filing bill of entry if it originally filed and again refiled after correction? Refiled after correction means not amended. Not amended. So when we are refiling means it means that it's a new bill of entry. So relevant date for bill of entry is the date of presentation of bill of entry, but not representation after correction. Okay, but so representation here, refiled after correction, whether it is amended or whether it is a fresh bill of entry, we need to check. If it is an amended bill of entry, the original bill of entry will be taken. If it is a fresh bill of entry, then we need to take the date of fresh bill of entry. So in this case they are telling this is an amended bill of entry. Due to that reason the original bill of entry only will be taken, but only in case when the bill of entry expires and when there is a fresh bill of entry file, that fresh bill of entry date only should be taken. Then next, interpretation of exemption notification. So Kansika trading case, whether government has right to withdraw or modify an exemption notification. That is, there is something called as doctrine of promissory estoppel. So doctrine of promissory estoppel means that, so I promised you that I will take rocket revision batch. Suppose if I am not keeping my promise, that is breach of doctrine of promissory estoppel. You understood or not? So whenever we go back on a particular promise, so power to exempt includes power to modify or withdraw the notification. However, it can be done in public interest, but you cannot invoke doctrine of promissory estoppel in case of exemption notification. You cannot say you gave an exemption means it's a promise. Wherein law it is given that exemption notification is a promise. Many promises itself, election promise itself, they are not keeping. So therefore, exemption notification and all cannot be called as a promise. Okay. So therefore, you need to write in exam that exemption notification is not a promise, and due to that reason, doctrine of promissory estoppel is not applicable in that case. Consequently, any exemption given can be withdrawn or modified, but that modification should be in the public interest. Then Pankaj Jain Agencies case, Supreme Court, what is the effective date of a notification? Notification is to be taken effect from the date of its publication in the official gazette. And what if gazette is not available on the date of issue of notification? So date of issue of notification will not affect its operativeness and enforceability, particularly when there are radio announcements and press releases. If not through gazette, they can release it through radio, etc. also. Then to India operations, can the benefit of exemption notification be denied due to non-fulfillment of condition beyond the importer's control? That is what has happened in this case. So they have imported some goods and that imported goods is exempted. For that they need to get the essentiality certificate from the Director General of Hydrocarbons, a government authority. And what happened? They made an application for essentiality certificate, but they could not get the certificate on time. Because of that reason, Customs Department said, no, as you did not produce the essentiality certificate, we are rejecting your exemption and you need to pay the customs duty. But then Supreme Court is telling, when the fulfillment of a condition is beyond the control of the importer, you cannot make him to pay the customs duty and deny the exemption notification. Moreover, here the control of the condition fulfillment is not on importer but on the government functionary, government authority. If a condition is not within the power and control of importer and depends upon the act of public functionaries, exemption cannot be denied on account of non-compliance of such condition. Then Hanilera textile case, that is, whenever there is no restrictive clause in the notification, we should not add such restrictive clause while interpreting the notification. Example, that what is the issue in this case? So if you are importing diesel generator set for the purpose of generation of electricity and that electricity is used in export production, and in that case on import of the diesel generator set you are not required to pay customs duty. This is what is given. But what they have done is that they have imported and they have generated the electricity, used it for manufacture of finished goods for export, but there is some surplus electricity. That surplus electricity which they generated, they sold it for outside to their sister concern, etc. and all. Because they generated surplus electricity and sold it to sister concern, so they have denied the exemption on the imported diesel generator set. But actually nowhere in the exemption notification it is given that the imported goods should be exclusively used in manufacture of finished goods for export. As the restrictive clause exclusively is not given in the notification, you cannot add that. Okay, so when a notification does not put a restrictive clause, can the department add such clause in the interpretation? No. Imported DG sets are exempted if the same is used for generation of power for manufacture of exported goods. When surplus power generated is sold, the exemption cannot be denied, as there is no words in the exemption notification that it should be exclusively used. And next, Mangalore Refinery and Petrochemicals Limited case, this already we know, whether customs duty payable on the short landing of the goods, that is the goods are not unloaded at all, that is the quantity imported is less than the quantity mentioned in the invoice. For that, the decision given is levy of customs duty is only on goods imported. When the goods are not imported, there cannot be levy, and consequently this 13, 22, 23 cannot be applied. However, if the imported goods are lost, pilfered or destroyed, then there is levy, that is imported goods are destroyed, and the above sections can be applied for claiming the benefit. Then next, classification of goods. Saurashtra Chemicals one case is there, whether section notes and chapter notes in the tariff have the overriding effect on headings while interpretation of tariff. Yes, so that's what rule 1 also says. Rule 1 says the headings are for reference. We need to classify based on section notes and chapter notes. Section notes and chapter notes are part of statute and relevant for classification. These notes sometimes restrict and sometimes expand the scope of headings, and they will always have the overriding effect on headings. Then Mastro Motors case, whether an exemption notification applicable to similar goods if the tariff heading is mentioned in that notification. So one exemption notification says goods falling under 8702 is exempted, which means that only those goods which are coming under 8702 is exempted. Some goods which are coming under some other heading so cannot be exempted. They are telling motor vehicles falling under 8702 is exempted, which means that only those motor vehicles which are coming under 8702 is exempted, but motor vehicles coming under 8701 or 8703 cannot be brought as exemption, even though that is also motor vehicle. But when the exemption notification says motor vehicles imported are exempted, if that motor vehicles is under any heading, it will be exempted. So that's what, whenever a tariff heading is used in the exemption notification, check whether the imported goods comes under the tariff heading, then only you can enjoy the exemption. If a tariff heading is specifically mentioned in the exemption notification, then such notification is applicable to those goods which are falling under that tariff heading and not applicable for other goods. However, if a product is mentioned in the notification, one product is mentioned, so like motor vehicles, then such notification is applicable to all such products, whether falling under the same heading or different heading. Then whether import of software preloaded in laptops to be classified along with the laptop imported Hewlett Packard sales. So for which they are telling that right now import of software is exempt under customs. Why they have exempted it under customs? Because software will always be treated as services under GST. So on import of software we need to pay GST. That's the reason why. However, when laptop is imported with preloaded OS, then software is part of laptop and classified as laptop, and such exemption cannot be given for software even though its value is ascertained separately, because basically we are not importing the software, we are importing the laptop, and in that laptop the software is loaded, so it's part and parcel of laptop and we need to pay customs duty. And they will be telling like laptop is 40,000 and the OS like preloaded OS is 6,000, like that. Even though the values they may tell separately, but what we pay is for the laptop and we need to pay customs duty on entire value of the laptop, okay, including the value of OS. Then next, Cainhan Penalpha Limited case, where a product is classified under a heading as per exemption notification, can the same classification be relied upon for the period prior? Already this tested, November 24 exam, same case, okay. And what is it they are telling? Government issued an exemption notification dated 1/3/2022 and classified electronic automatic regulators under a particular heading. Since a product is classified under a heading with effect from 1/3/2022, by whom? By the department. For the period prior to 1/3/2022 also they should follow the same tariff or same classification. So therefore the same classification should be accepted by department for the period prior to that date also. Then next one, Bombay dyeing case by Supreme Court, whether a vendor inspection charges incurred by exporter on his own to be included in the value. See, any expenditure which is incurred by the exporter, only if charged to importer we need to include in the value. When he is not charging, why we need to include it in the value? Vendor inspection charges by foreign supplier on his own account are not required for making the goods ready for shipment, are not includable in the assessable value of the imported goods. And Denso Kirloskar Industries, whether a technical know-how charges payable by importer after import be included in the value of the imported goods, okay. So see, first of all, after import will be included only if it is as per the contract. The cost is thus incurred after the importation of the goods and therefore cannot be loaded onto the assessable value of imported goods. This cost is for manufacture of products after setting up of the plant. So that's why we should not include it. Then whether canalizing agent commission is includable in assessable value, okay. So these are not like buying commission. I'll tell you what happens is that first of all there is a canalizing agent. These canalizing agents will place the order with the foreign seller and will be bringing the goods, and when the goods are in transit they will just transfer the documents of title to us, and so they will charge some commission for doing this. So this cannot be called as a commission paid to our buying agent, okay. So actually per se if you see it is like commission paid to buying agent, but in that they are telling buying agent is different from canalizing agent, because whenever some goods are reserved for state trading enterprises only they should import it in their name, for that reason they are doing it. So therefore this commission cannot be called as buying commission, okay. And generally buying commission should be included in value or excluded from value? Excluded from value. Say this, the commission or service charges paid to canalizing agent are includable in the assessable value, because it is pre-import only, na. So therefore it should be included in assessable value, and these cannot be termed as buying commission. This is Hyderabad Industries case. And what they will do is that they will not ask this as a case law. Sometimes they will connect it to a regular question, a computation based question also they will be connecting. That's why it is important to learn the case laws also. So I'll just show you one question. In one past exam they have given this. So So one computation based question is there. Say this. Messrs. Detox Limited wanted to import a customized machine to be used in its business. Detox Limited provides the following further details: cost of the machine, charges paid to canalizing agent in India. Okay, so what they will do in a computation based question, the case law will be connected like this, and what is your answer, whether the 25,000 to be included or not included. So they gave a confusion in such a way that is in Indian rupees, everything else is like foreign currency. So we will think it is like a buying commission and it should not be included, but actually it should be included because of this case, Hyderabad Industries Limited case. Then Agarwal Industries case, what is the relevant price if there is an increase in market price? See, if there is an increase in market price, let that be, but what importer pays? The contracted price. So if the goods are sold at a contracted price, it should be the assessable value, even though there is an increase in the price in the international market, unless there is an allegation regarding the collusion of importer and exporter, when price is not the sole consideration, and if the customs officer proves that the price is not sole consideration, then only they can reject it. Then Gira Enterprises case, can the value declared by the office, like by the importer, be rejected without giving opportunity of being heard? No. So one of the principles of natural justice is that whenever department takes any action, they should give a notice. So importer should be given an opportunity of being heard before rejecting the declared value based on the alleged printout. So in this case, what happened is that they are telling we have one printout, based on that printout we have all the data about you, so therefore we are rejecting the value. Okay, what is the data? Show me. So therefore they are not showing. So alleged printout containing the increased value of the comparable imports. Then next one, can department demand duty on pilfered goods from portress authorities by considering them as custodian of goods? See, basically custodian should be appointed. By default you cannot take portress authorities as the custodian. If they are notified, then they will be called as custodian, otherwise they will not be called as custodian. As per section 45 subsection 3, the liability to pay duty is on the person in whose custody the goods remain as an approved person. Therefore this provision applies only to the private custodians who are required to be approved by department. Okay, accordingly the major ports and airports covered under Major Port Trust Act who does not require any approval are not custodians. Thus department cannot demand duty from the port trust on the pilferage. Okay, and suppose if they have notified any person as a custodian, then from them the duty can be demanded. Next, Pratibha Processors case, that is customs duty payable on warehoused goods. So we need to pay interest after expiry of the warehousing period, correct? So whether interest is payable if the warehouse goods are exported from warehouse after 60 days from the date of warehousing order. Sir, 90 days na sir. Why it is given as 60 days? At that time it was 60 days. At that time it was 60 days and now they have modified it to 90 days. So when it came at the time, when the case law happened, at the time it was 60 days. Okay, you don't get worried. So 90 days only, or after interest free period, better. After interest free period, that will be better. Or you can modify this, but actually in the case law it was 60 days, at present 90 days. At present 90 days. Okay, now so it is not about that 60 or 90, the problem is about the goods are exported after 90 days. Okay, whether we need to pay the warehousing interest. Exported after 90 days means definitely interest will come from 91st day, but on what? 15% of what? Customs duty payable. What is the customs duty payable? 0. 0 into anything is 0. So therefore interest is not payable. For that Supreme Court gave the decision. So what is that? When goods are not chargeable to duty or exempt from duty at the time of clearance from warehouse, interest cannot be levied on a non-existing liability. Therefore if duty is nil, interest is also nil, because 0 into anything is 0. Okay. Then Kesoram Rayan case. What is the relevant date of rate of duty if the goods are not cleared within the permissible warehousing period? If goods are not cleared within the permissible warehousing period, on expiry of warehousing period, whatever is the rate, that should only be taken, but the export bill of entry is irrelevant. Already I told you that. Biocco Larry case, Supreme Court. Out of customs charge order is passed upon filing export bill of entry, but the goods are not cleared. If there is any increase in the rate of duty, can the same be collected? See here, carefully listen. Out of customs charge order is passed or not passed? Passed means this person, I am that importer, I filed ex-bond bill of entry, out of customs charge order passed, I paid the customs duty, but I requested, sir, keep the goods in warehouse and I will clear it later. So next month when I came for clearance, so what happened in this time, the customs duty on these goods got increased, and now the customs office is telling, no, you have to pay the increased duty. Already I paid, already I paid, out of customs charge order they passed. So there is a limit, bro, for everything. And in this case, Supreme Court has held that when duty on the warehoused goods is paid and out of customs charge order for home consumption is made by the proper officer, the goods allowed to be retained for storage in the warehouse and not treated as warehoused goods. They are not treated as warehoused goods, and importer would not be required to pay anything more because already out of customs charge order passed and he filed the ex-bond bill of entry. He paid the customs duty also. Then next we have allied photographics case, Supreme Court, whether doctrine of unjust enrichment be applicable in case of duty paid under protest. Already I told you that generally time limit is not applicable in case of duty paid under protest. And whether doctrine of unjust enrichment is applicable or not applicable, applicable, definitely applicable, because even the duty paid under protest is also duty only na. There is a possibility that you can recover the duty from the next person. So doctrine of unjust enrichment applies even when duty is paid under protest. What will happen? They will give this question in exam. You will think, duty paid under protest, sir said one exception, maybe this could be that exception, and therefore doctrine of unjust enrichment not applicable, like that you will write. So it is applicable. It has been held that even if there is no change in the price before and after assessment. So awesome point it is. What they are telling, sir, before also my sale price is same, sir. Now also my sale price is same, sir. So therefore I have not recovered the duty from my customer. You understood? Before payment of this duty also my sale price same, after payment of this duty also my sale price same. So sale price not change. Sale price not change means I have not recovered. No, definitely we cannot. How we can say that sale price is same means we have not recovered? Maybe one cost would have come down and this duty we would have recovered. So we cannot take that view. So that's what they are telling. It has been held that even if there is no change in the price before and after assessment, that is before and after imposition of duty, it does not lead to the inevitable conclusion that incidence of duty has been passed on to the buyer. As such, uniformity may be because of various factors. Underline that, uniformity may be due to various factors. Then Priya Blue Industries case, whether refund claim is an alternative to appeal. This also they have tested. So refund claim is not an alternative to appeal. For example, first the department is doing reassessment of duty. Reassessment of duty, say instead of 4 lakhs they are asking us to pay 8 lakhs and we paid the 8 lakhs. After paying 8 lakhs, so thereafter we should not go to the same officer and tell, sir, I paid by excess 8 lakhs, sir, give me refund. Same officer who passed the order, how he will give refund? So we should have gone for appeal. But in this case what has happened, the time limit to go for appeal is over. The time limit to go for appeal is 60 days, but the time limit for refund application is 1 year. So that's the reason why they went for refund application under excess payment of tax, but for which they have rejected this refund application. When the importer do not agree to the assessment made by the officer, but the duty is paid as per the assessment order, the correct mode of redressal is to file an appeal, but cannot file a refund application. So a refund claim is not an appeal proceeding. Then last case, customs duty paid in excess on import of capital goods, and the price of finished goods remains same before and after import of capital goods. Whether refund is subject to unjust enrichment. So what is your answer? Price remains the same. Just now I told you. So the incidence of duty can be passed directly or indirectly. Where the capital goods are used for manufacture, the duty paid on their import will go into the costing of the goods and thus therefore can be passed. Uniformity in price after assessment does not lead to inevitable conclusion that the duty burden has not been passed. So therefore doctrine of unjust enrichment is applicable in that case. So these are the cases which are given in your ICS study material. Nook and corner, every page I have taken and I have verified, and then only I gave these cases. So these are the only cases. Out of this case, one question will be guaranteed for 4 marks. Okay, so therefore this portion alone you mark it, and one day before the exam you revise this and go for exam. Okay.